Okay, well, Eli Lilly reported second quarter profit earlier this morning that beat Wall Street estimates, and the drug maker raised its forecast. To discuss the results and the outlook, we are joined by the company's Chief Financial Officer, Derica Rice, and he comes to us from Eli's company headquarters in Indianapolis. And thanks so much, Mr. Rice, for joining us.
Good morning, Betty.
Some of the questions that are surrounding your results, which again you've beat Wall Street estimates on the bottom line. How much of that was due to cost cutting?
Well, Betty, we're very pleased with our first quarter results. In fact, we did have good expense control and cost management through the quarter, but primarily our underlying strong performance was driven by our volume growth, our revenue growth. So of our total growth of 1% in revenue, we did have 6 percentage points of negative headwind due to FX. But on a performance basis, we had 4% volume growth and 3% price growth. Within that volume, Cymbalta grew 14%. Our Alimta drug for cancer grew 40%. And Humalog for diabetes grew 9%. So, our performance in the second quarter was really driven by our sales volume growth.
Okay, we'll talk more about volume and revenue, Mr. Rice, in a few moments. But you mentioned Forex headwind. I know you talked a bit about that earlier. I mean, do you foresee that trend, though, continuing through the end of the year?
Well, Betty, I don't have a crystal ball in terms of what future Forex would be. But what we've stated is that if rates stay where they are today, we would continue to see, from a revenue growth standpoint in year-on-year comparison, a headwind in the second half of the year as rates finally stabilize in the fourth quarter. But we would also see the gross margin benefit that we got in the first half of the year will begin to mitigate in the second half. But beneath that, we also expect to begin to invest for the launch of Effient in the U.S. and our markets outside the U.S., as well as the expenses around as we progress our pipeline to later stages and more expensive stages of development.
And some would say, actually, that you have one of the best pipelines out there among the drug companies. But still, there are a lot of questions about your drugs coming off patent. I'm talking about Zyprexa, for instance. I think it's about 23% of your sales. That's going off patent in 2 years. You've got 4 major drugs that I think represent about half your revenue coming off patent in just the next 4 years. So how do you assure investors that you've got enough drugs in the pipeline to replace that revenue?
Well, our strategy, Betty, is an innovation-led strategy. Today, we have 66 assets or medicines in clinical stage or human stage of testing. We just moved our second Alzheimer's drug into late-stage testing. I think to date, we're the only pharmaceutical company to have 2 Alzheimer's drugs in the latter stages of clinical testing. That is how we look to replace the lost revenue for Zyprexa once we lose patent there. Will we replace it immediately in the 12 months post the patent loss? I don't believe so. But I do believe we have the capacity to replace it over time. Are
you going to buy more pipeline, do you believe?
Well, in regards to business development or M&A, we're not looking for the large-scale M&A that you maybe have seen in the Merck or the Pfizer transactions. But we absolutely are interested in those opportunities where we are able to enhance our pipeline, such as we did with the M-Clone acquisition, where today we have 5 assets in clinical development there that we inherited from M-Clone, as well as the biotechnology expertise and presence.
Well, can you give us any numbers, Mr. Rice, on, for instance, you just mentioned M-Clone, on how much the M-Clone pipeline could replace some of that lost revenue, or even some of the new drugs? I believe the FDA just approved your blood thinner Effient. I mean, how much will that replace some of the revenue? Do you have any numbers on that?
Well, we have not provided forward-looking guidance in terms of, the post, what we call YZ years, where we lose the patent protection for Zyprexa and for Cymbalta. But what I do believe is that if I look over time, one, we'll be able to enhance our productivity up to the loss of Zyprexa. And as we look to go through Zyprexa, our goal is to have at least 10 phase 3 molecules in development by 2011. And that's where we would be able to give very visible signs to the investment community about our ability to replace those lost revenues for Zyprexa and Cymbalta.
And just last question, Mr. Rice. With healthcare reform, it appears that Obama's plan promotes more use of generic drugs, which is bad for healthcare companies or drug care companies like you. What are you preparing to do with that?
Well, we've been preparing for that for some time, even before we knew the specifics around healthcare reform. So if I take our latest approval with Effient, that's a drug where we actually did a head-to-head trial with Plavix, which at the time was the gold standard, to prove superiority, because we knew at some time in the life span of the Effient patent that Plavix would be generic. So we needed to be able to bring a value proposition that would justify the utilization of our drug versus the competitor. And the fact that we were able to demonstrate superiority through 19% overall risk reduction, we believe gives us the opportunity to thrive in the current environment around healthcare reform.
Okay, Derica, thank you very much for joining us and talking about Eli Lilly's outlook amid healthcare reform as well as a recession. Derica Rice, the CFO of Eli Lilly.